So in today's session, we are going to go over what happened in the market, what did Nifty do, what did BankNifty do, and what do we expect from the Intersector chart. So this is the 3-minute time frame since Monday. Correction which took the closing to 19,424 for the week. This consolidation happened around the level of 19,600, which was an expected resistance zone. So is this correction something that we should be worried about? I don't think so. The first reason being that on this intraday chart of Nifty itself, it looks like there is a positive range shift. Do you see how deep into the level of 60 plus this recent move of RSI has gone? This is good. It's been a while since RSI actually went this high. This upside which happened was so strong, gives me comfort and confidence that we are going to resume the uptrend soon enough. What I see right now is this correction that is unfolding currently is the last leg of the correction. You can also see there is this blue line giving support to the price. So my opinion is Nifty is simply coming down to probably retest either this level or the next strong support that it has right under, which is 19,200. So as long as the level of 19,200 is intact, I am not worried about the broad trend of the market. Speaking of the 15-minute time frames RSI, we did the same analysis last week also, and we concluded there was bullishness in the market, and what we are experiencing here is a temporary correction because we had noticed that there was these two penetration below the level of 30 on the 15-minute time frame. That is the reason why we expect that this correction might come down and reach this level of 200 EMA of the 75-minute time frame and briefly go visit the 19,200 level, which has actually played a very important role in the market multiple times in the past. Now, coming to the 75-minute time, we can see the underlying trend is very strong. And how do we see that? Look at the last time the Nifty gave an up leg. Sure, there was a small negative divergence, but the RSI continued to remain above the level of 75 for a consistent amount of time, which is sign enough for me that the trend is bullish. Here also you see there was a strong indication of the uptrend. There was some correction, sure, but then the market continued to rally very strongly. So that is the reason why I believe one more leg of rally is definitely still left. And as a result of that, I believe 20,600 is a good potential target for them. On the daily time frame also, again, strong momentum. Short-term analysis suggests some weakness is there, but the overall trend continues to remain very strong. And I expect the market to not reach the level of 19,200. But if it does, then we'll see what our next strategy is. On a stock-specific basis, all of my holdings are currently being maintained with stop losses in place. Same goes for all the active ideas which have been given to my members. So just so you know, the stock ideas that I give to my members are always done so with stop loss and target levels, and these stop loss levels are also revised periodically as and when the price moves up and reaches key resistance zones. Remember that in the stock market, to make money, buying stocks is not enough. You have to buy them and you have to sell them at the right time, and between that you need to actively manage your positions. It does not matter whether you're an intraday trader, short-term trader, or a long-term trader, or a medium-term trader like I am. You still need to manage your positions. The frequency of managing the position changes depending on your horizon. With that, let's move on to the Bank Nifty. Going back to the 3-minute time frame. Okay, so on the 3-minute time frame, Bank Nifty. Okay, so the Bank Nifty has already achieved the target which I had mentioned earlier, which was 44,100, 44,200. And on the 3-minute time frame, things are looking pretty good to me. I don't see any reason to be worried at all. The 15-minute time frame, 15-minute time frame is giving a very interesting and strong positive divergence. And also there is this key trend line which is right now being tested. So if this key trend line is not breached and sustains, then I would say that banking stocks might actually give us a short-term opportunity to trade. So I'm going to set an alert here, and if the price of Bank Nifty goes back above 44,400, I believe it's a good time to participate in banking stocks again for good opportunities to make money. Now, on the 75-minute time frame, what I'm seeing is that this green little line, which is the 100 EMA of the daily time frame, reflecting on the 75-minute time frame, is acting as a support for the price, or rather the price has pretty much crept up on it. Again, we see the trend line support there. and 44,800 here had acted as a small resistance. Now the daily time frame. The daily time frame, again, not much to see. Underlying trend continues to remain bullish. So one more leg of upside in the bank nifty is also quite likely. Now let's move on to my intersector chart. Um, if you are a subscriber of my YouTube channel, then you've definitely seen the video where I have built this dashboard. Now, this is actually the version 2 of the intersector chart analysis, which I've been doing this with this relative chart. But I'm going to start using it only after I feel more confident and I want to spend some more time analyzing and understanding this. So until then, we will stick with our OG intersector chart. Now, the media sector has clearly been the winner of the week. We saw massive rally in the Z Limited stocks this week, closing in double digits. So with media sector being 7.5% up this week since the opening on Monday, the PSU Bank has been quite close behind. It's 2.89%. Bank Nifty if you ask me about Bank Nifty, where is Bank Nifty on this chart? It looks like Bank Nifty's gone down. Let me remove the CNX Nifty, the media for a bit. Okay, so this yellow line I think is the FMCG. Okay, so FMCG has been the biggest loser of the week. And then we see, okay, let's adjust that a little bit. Consumer sector is done good with 1.73% win. Metal sector is done up. So basically, if you look at things, stock specific or sector specific way, the market wasn't really bad, right? Even though the broad index has been kind of choppy, sectors have done pretty well, especially the media and the PSU bank sector, consumer durables, metals, IT, PSE, energy, and auto. Coming down to the losers, it looks like healthcare, FMCG, service, finance, and bank nifty have done pretty bad. My broad analysis on sectors right now is that we saw that a short term opportunity might be emerging in bank nifty, and while it might be good for small gains, I feel like big gains might not be lying in the banking sector or the finance sector right now. In fact, there are some sectors which have been the underdogs since March, where big opportunities, big reversals are brewing right now. One such sector is the chemical sector. I have been sharing some of my chemical picks with my members. I'm going to link those picks down in the trade setups down in the comments for you to check them out. And if you're interested, go ahead and participate in them. So check out the comments for those. I believe that big money opportunities are coming up in these underdog sectors like chemicals. And if you're somebody who likes to protect their capital from unnecessary exposure, I would suggest don't focus so much on the banks. And I understand why focusing on the banks makes so much sense, because we've recently seen a lot of rally in the banks and we feel like a lot of us might feel that we've missed that rally. But remember, you cannot catch a missed train, right? It's always better to get on the next one rather than chasing the one that's already left the station. And having said that, there's one more thing that I want to emphasize for our retail traders, especially people who are new to the market. You might feel the urge to always look at stocks which are doing good and averaging the costs stocks which are doing bad. That is, if you focus too much on the stocks which are doing good, that is giving you profit, you will end up booking profits too soon. But if you focus on the stocks which are giving you losses, then you will end up removing them too soon. That is not letting those losses grow. And when you do that, your profitable stocks continue to grow and keep growing your capital. But when you keep focusing on your profits, then what happens is that when a stock starts becoming a loser, you think a good strategy would be to add more capital to that. And when you think about it logically, it makes no sense to put your capital where it's already getting butchered, right? So think about that this week and let me know in the comments what your thoughts are. This is all I had for you in the Market Outlook series. I will see you again in the webinar that I'm hosting next week on Tuesday on my YouTube channel. It's a free webinar. Do attend it. I'm going to be talking about Fibonacci retracements. In fact, I'm going to link the webinar here in the comment also. So if you want to check it out and set up your notification. So thank you so much for joining in. I'm Kavita signing out. Have a great weekend. Bye-bye.